Aotearoa, and welcome to Thursday's Economy Watch, where we follow the economic events and trends that affect Aotearoa. I'm David Chaston, and this is the international edition from interest.co.nz. And today we leave with news deeper turmoil in the Middle East has overshadowed the US Fed meeting. But first up, in an 11-1 vote, the US Federal Reserve decided to hold its policy rate unchanged at 3.25% at today's meeting. Only Trump's insert, Stephen Moran, voted against the consensus. The immediate response from financial markets wasn't large, probably because this was the expected result. While their dot plot signals a rate cut later this year, markets do not have that priced in, though. In fact, the futures market is looking for rises. Elsewhere in the US, mortgage applications sank last week by almost 11%, as rising mortgage rates killed off demand. Almost all of this pullback was for refi demand. American producer prices surged 0.7% in February from January to be 3.4% higher than year-ago levels. That's their biggest rise in more than a year. If you just isolate producer prices for goods only, the jump was noticeably more, up 1.1% in just 1 month. That makes the January factory order data look rather weak. They were up just 0.1% from a month earlier, up 3.5% from a year ago. So almost all of this is accounted for by inflation, and the recent order level growth is far less than recent inflation. Financial markets noticed and sagged. US crude stocks rose and by more than expected last week, but this had little impact on the rising oil price. But US domestic petrol inventories dived last week in a major way, making this notable as it was the 5th consecutive weekly drop. The Bank of Canada left its overnight target rate steady at 2.25% at its March meeting, as expected. And staying in Canada, they reported that their 41.5 million population declined by more than 100,000 in 2025, mainly due to an exodus of foreign workers. Meanwhile, the Japanese Reuters Tankan Index rose to 18 points in March from 13 points in February, and its highest non-pandemic level since 2019. In South Korea, we should note that a 66,000-member union has voted to strike at a major Samsung electronics facility in May. If it happens, it'll be yet another supply chain disruption for a key global electronics supplier. This is a company union, and only the second time in its history it has voted to strike, so there must be deep dissatisfaction involved. In Malaysia, they became the first country to confirm that their special trade pact with the US is now void following the US Supreme Court's tariff ruling. It will likely trigger a cascade of other countries declaring the same. In China, new official data out shows that cement production surged in February, back to 2023 levels, and perhaps a solid indication that construction activity is picking up there after a long 2-year low period. In Australia, the 6-month annualised growth rate in the Westpac Melbourne Institute Leading Index, which indicates the likely pace of economic activity relative to trend 3 to 9 months into the future, held at 0.08% in February. Unchanged from January, but down from a more positive level seen late last year. Of course, this metric covers periods before the US-Iran war. Meanwhile, far north Queensland has been warned to brace for tropical cyclone Narelle, forecast to make landfall as a Category 4 to 5 system tomorrow morning, with destructive wind gusts of up to 250 kilometres per hour. Generally, we should probably note that the US dollar's steady devaluation against the Chinese yuan seems to have ended, with the rate holding steady for the past few weeks. The US Treasury 10-year yield is now just on 4.22%, up 2 basis points from yesterday at this time, and little changed after the Fed decision. And the price of gold will start today down $121 from yesterday at $4,880 an ounce. Silver's down $2.50 at $77 an ounce. American oil prices are up almost $3 at just under $98 a barrel, while the international Brent price is up $6, now just over $108 a barrel. The Straits of Hormuz remain no-go areas for most, with the situation still extremely unstable. The ships transiting are those approved by Iran, which holds all the cards at present. The Israeli attack overnight on Iranian gas fields has delivered a large spike in natural gas prices. The Kiwi dollar has dipped today, down 20 basis points against the US dollar from yesterday, now just on 58.4 US cents. Against the Aussie, we're unchanged at 82.5 Australian cents, with little change against the yen. Against the euro, we're down 10 basis points at 50.7 euro cents. That all means our trade-weighted index starts today down 20 basis points at just over 62. And the Bitcoin price starts today at $71,293 and down 3.9% from yesterday. Volatility over the past 24 hours has been moderate, at just on plus or minus 2.8%. You can get more news affecting the economy in New Zealand from interest.co.nz. Kia ora, I'm David Chaston, and we'll do this again tomorrow.